elevation. We hunt and we hungry, we celebrating, turning nothing to something and celebrating. Market's changing, we calibrating. The first to get acclimated is the first to stack the payments, but you need to act with patience, but be careful waiting, cause this opportunity won't last forever before it is evaporated. So if you wanna flip some houses, hit me up to make a plan. Your flip deserves the upper hand.
Hey guys, I am excited to welcome you back to another episode of Raising the Flipping Bar. It's been a hot minute, and this new episode, this is going to be season 5. We're recording this in July of 2025, so we'll have this released in the same month. But we're doing kind of some new production, so you'll have to bear with us. I'm really excited about why we're doing this and how we're doing this. So I'm actually going to record another episode here in a while to talk about some of the marketing shifts and marketing strategies that we've changed and kind of why we're doing this. But for now, the big thing is, okay, like, why did I take a break? Again, we're taking production in-house, and I want to give you guys some updates on what's going on at Elevation. We'll talk about the market a little bit, and then I've got a great case study coming up here on our next episode, so definitely stay tuned. For me, I was really thinking about return on investment, and so that's why I'm making a long-term investment to take this in-house, and I'll have some fun, exciting news to share with you guys on from a staffing perspective. But what I'm really doing is I took about 3 months off. And the reason I did that is because I wanted to focus honestly in the business instead of on the business. I know those of you that have listened for a while, you guys know that I'm a traction nerd, a traction junkie as far as how we run the business. And there's times and seasons of your business when you need to work in the business, meaning you need to be doing the thing. It's great to continue to oversee things, which is what I still have to do and I enjoy doing. But I'm really getting into sales. I'm working with our sales team one-on-one. I'm going on appointments. I'm out in the field, which I really, really enjoy. One of my man crushes that you guys know that my wife always gives me a hard time about is the content that Alex Hormozy at acquisition.com puts out. And it's about doing the thing is what he says. So for us, it's actually doing the real estate investing. It's making sure that our rehab numbers are dialed. It's making sure that our price points are appropriate for when we're buying and when we're selling. So again, you're not getting just some guru that's teaching you something from 5 years ago or from a different market. This is like real-time stuff of what's going on right now in the Denver market. So again, our whole process, everything will be documented. It's going to include new AI tools that we're using for the podcast too, which is super exciting. I mean, obviously, man, AI is just moving at light speed. And so it's something that we're trying to tap into every single aspect of our business, and Raising the Flipping Bar is no different. So let's really rock and roll with honestly, this is the perfect time for a mid-year update. So we're going to talk about what's going on in the market and then some of the differences of how is Elevation changing and adapting to thrive in what continues to be a super challenging market for flipping properties in 2025. Right now, according to DMAR, which is the Denver Metro Association of Realtors, obviously we've had a lot of inventory that keeps coming on the market. And essentially what that means is there's more homes being listed for sale than properties that are going under contract and flying off the shelf and being sold. And so I think the $1 million question or, $10 million question or whatever is the market slowing down? Yeah, I mean, it absolutely is. But a lot of that is because it had to. I mean, if we think about it from a historical perspective, I looked at data, and we'll jump in, again, you guys know me, I'll nerd out here in a second on some data points, but we came from just a tremendous amount of inventory that came on the market when the housing crash happened in 2008, 9, and 10. And then it slowly and steadily declined. Right now in 2025, we are seeing similar inventory levels or number of properties for sale as just over 10 years ago. Definitely challenging, but it's not the worst thing in the world. And so one of the things that I'm really trying to weave in AI and how can I use AI to help grow our business. But honestly, the big thing too is always as a research tool. So I asked ChatGPT, and we've got like the paid premium version or whatever, because I do think that's a super smart investment. As an aside, we're going to record another episode here shortly on 6 or 7 tools that we're using in all facets of our business for AI to help us grow Elevation. So stay tuned for that one. But I asked Chat, and this is kind of a cool prompt thing that somebody told me about, is to say, use a non-obvious reason why the Denver Metro inventory has risen, and is it shifting from a seller's market to a buyer's market? And so here's some of the stuff that I found. So what I'm doing is I'm honestly calling this a bipolar market, meaning there's increase in inventory. And when homes are done really well from a rehab perspective. They're priced well. And honestly, that pricing is not based on what lagging comps have sold for, meaning you used to be able, or we used to be able to look at, okay, what is the sales price over the last 90 days? What's the condition of that home? We never overestimated. We never said, oh, well, this home sold for 700 grand. We make the super nicest stuff. We can sell our house for 750. We always said, let's just use the regular data point. But now what we're really leaning much more into is what is the active competition on the market when we are selling that home, which is, I know, sometimes hard to judge. If you're buying a house in December and you're going to sell it March, how the hell do you know what's going to be active? But more importantly, from a pricing perspective, you should have that dialed in of what you think it'll be, again, based on comps. And then when you go to make that final decision before you list it, you need to be really sensitive to what is your current competition, because those buyers and their agents are showing them 6, 7, 8, 10 houses that are pretty dang similar, probably to yours. So the reason why I'm calling it bipolar is stuff either gets overpriced and completely sits, and it sits for 90 to 120 days, and you need several price cuts to sell the property. Or if it's done really well, if it's priced appropriately, if it's in immaculate shape, whatever your price point is, you have a good chance of selling within 30 days. And so it just doesn't seem to be anything in the middle. It's either goes pretty dang well if you underwrite it appropriately and you do your homework and you do a good job. Or if you kind of get greedy or you think it's 2021, people are probably going to sit. And again, this is for the spring market. We're just coming out of what we used to be the hottest time. I think we're already starting to trend off that market in July. Looking back of interest rates, that's obviously another huge factor. Interest rates right now are actually a little bit lower than June and July of 2024. So kind of logic would dictate, man, we should be selling more homes, but we're just not. And that's because buyers are they're taking their time. Again, it's much more of a balanced market right now. They are definitely, for the most part, doing lower offers, or they're coming in at full price and they're asking for a concession so that they can buy down their interest rate, which I know a lot of you guys know this, but buying down your interest rate, that means that essentially you are fronting the money as a seller to their lender so that they can have a lower interest rate for 1, 2, or 3 years, and then it resets. And so essentially you're kind of footing that cost. So whether you consider it, like on one hand, a price drop, on the other hand, a concession, it all affects your net profit. So to me, it's the same. Again, kind of like a pro tip or a flip tip is I really try to get our agents to ask the buyer's agent, what do they want? Do they want a lower price, or do they want that same price? And do they want it to be a credit or a concession? Another pro tip, again, sorry to kind of get on my soapbox here, but the tough thing for me is that real estate agents, both people that we use to sell our properties on the elevation team or buyer's agents, they get paid a percentage of the price. Well, if you keep the price the same but have a big concession, they're still getting paid on what I call or everybody calls the gross price, the gross sales price of the property. So I know it's not earth shattering. You're talking, but at a lot of our price points, you're talking on average about $750 on, let's call it a $500,000. Well, let me rephrase that. I would say if we're selling, we just did a deal where we sold a $700,000 house and we did a $15,000 price concession. You guys can fact check me, but that's like a $500 difference of what they should have gotten paid, in my opinion, versus what we got paid because it's going off of the gross sales price. If you're talking about a more expensive property and maybe you're talking about a $50,000 concession, which is a lot, but it happens from time to time, you're talking like $1,000. Well, if you're doing 10 flips a year, you've just given away $10,000. And so the way that I like to think about it is that's money that you've worked really hard to earn. Don't just give it away. Use that as a negotiation point when you are going under contract with your buyers. So that's something that I think is really, really sensitive and you need to be careful about. And so also we'll have it in the show notes. But our sources for today's episode, again, the Denver Metro Association of Realtors, DMAR, Zillow studies, Redfin studies, and then I found a study from the city of Denver, the Economic Housing Development Survey. And so we'll put that in the show notes. Okay. So let's review June 2025 stats, because again, we're recording this in July. This will drop in July, and you obviously don't have that data until month end. So active listings right now, and a big kind of, asterisk on this statistic is it is total properties for sale. So detached single family homes, which is where we do most of our business of rehabbing single family homes. But then they call them attached, meaning condos and townhomes. And that's a whole nother episode. I've got actually a good buddy who does development, and they're doing condos and townhomes. And unfortunately, that market is just getting hammered because proportionately, there's so much more inventory than even single family homes based on the number of buyers that they have. So I'm going to give you total stats, but we can also go back and carve out what single families are because that's kind of our bread and butter. But right now, there's just over 14,000 active properties on the market. That's only up 3%, which is not a ton, but when the number's 14,000, that's still, a couple hundred houses. New listings that came on the market in June, 5,929. So just under 6,000 properties. The good news is that number decreased by 18%. So that properties coming on the market, they're starting to slow down. People are seeing unless you really need to sell, and want to sell, then they're being really, really careful. The properties that go under contract, and that's called pending sales, last month was just over 1,068 homes. The good news, well, I don't know how you look at this, good news or bad news, but that number is down 1.6%. So that means that slightly less properties are going under contract. But you can see how inventory starts to stack and how we've gotten to this 14,000 number, because if you have roughly 6,000 new homes that come on the market and only selling 4,000, simple math, it's like we're, not paying off our credit card and we're just kind of making the minimum payments here. This is a big one, months of inventory, which means that if we shut off the faucet and no new properties could come on the market, how long would it take to sell everything? Right now, we're at 3.63 months of inventory, which I remember before I was recording this podcast, but January of 2021, we had the lowest inventory in Metro Denver that we've ever seen. And I want to say, again, fact check me, but it was right around 3,000 total properties. And I think there was only about 1,500 of those that were single family homes. Obviously, no brainer. That's why there was this monster bidding war and why everything went sky high, because you had 10 people trying to buy the same house. That one, months of inventory, is up 7.7%. And so again, it's slowly taking longer for more houses to sell. That's because there's more properties on the market. So I do feel like this is like an Econ 101 class, but it's super, super important to look at the data and know what we're talking about. This one is still surprising to me. And maybe again, somebody can message us and chime in as to why this is. But right now, median days in the MLS, it's only 18. And what that means is the property is in the MLS or on the market, if you will, for only 18 days, and then it's going under contract. That's a significant increase. Before, again, stuff would fly off the shelf. You'd put it on the market on Friday. You'd have multiple offers. You would kick back and, have your margarita or pop your champagne and pick the best offer. You'd go under contract in a day or two, and then you would immediately sell 30 days later. Sadly, we're not there anymore. So the median days on market, 18, is actually up 38%. So we're definitely adding the time that it takes for stuff to sell. Okay, so again, big data nerd, obviously, but to me, it's all about trying to understand perspective. And I really try to lean on my finance background when I was working in Wall Street and all my family working in Wall Street being traders. And it's all about data and where do we come from and where are we going? And I think that helps you have a longer term view on the market. It helps me, depending upon the night, helps me sleep at night. Some nights are still some restless nights in this freaking market. But let's talk about the record high level of inventory. And I thought this was interesting because the record high that I found, and again, I'm looking at June's, kind of all June, so we can keep it kind of apples to apples, but June of 2006, which is interesting because that was pre-crash, but obviously a lot of people could have slowly seen what was coming. But there were almost 32,000 properties for sale in Metro Denver. It was 31,900 homes in June 2006. What's the record low in June? 2021, no shocker there, but there were only 3,122 properties for sale in June. And so we're kind of sitting in the middle. It definitely feels like it's much more of a buyer's market right now. But if we kind of stepped back and someone was just, looking at the market from afar, we're kind of right in the middle. And so, let's also look at another mile marker. And what that is, okay, what did stuff look like pre-COVID? Because again, I think COVID is this 2021 through 2020, well, really 2020, excuse me, through 2022. At least the first half is just this crazy outlier. And I don't want to see that again. Honestly, it was nuts. It was fun. It was great. Every deal we did became a home run. But that's not normal. And so I looked at June of 2019, and then I did kind of break this out. This is detached single family homes because this is our bread and butter. There were 6,500 new listings that came on the market in June of 19. There were 6,900 active listings that came on in June of 19. Here's the kicker, and this obviously is no shocker to people, and this is me being a proponent of general home ownership for the vast majority of people, is the median price of a detached single family home was 465,000. Right now, last I looked, we're right around 675 for median home price. So again, people are building that generational wealth. And the other thing that I love, again, sorry for tangent time, but I think home ownership is forced savings. As Americans, we don't do a good job of saving money unless we're given free money by the government for stimulus. And then we've proven that we spend that money, when we get out of lockdown. So I think forced savings is honestly a huge benefit of home ownership, but another story for another podcast. Here's another thing really, really important about June of 19 is the interest rate for a 30-year mortgage was 3.8%. Right now we're, roughly 6.8%, 6.75. We're bouncing right around in there. So there's some interesting market dynamics that make it kind of not surprising why we are where we are, but it's still like, how do we deal with it and how do we do a good job in developing our business? So one of the interesting things that also jumped out at me when I was kind of going down nerd lane with my data is they DMAR brackets, they call them brackets. So it's roughly either $100,000 price increments, or when you start getting into more expensive stuff, they break it up into $250,000 price increments. And so looking at their data, and I'm going to make sure that I've got my notes right, so I'm going to stare at my notes here for a sec, is the price range of homes selling between 500,000 and $750,000, there was almost 2 to 2.5 times the amount of inventory or the homes for sale in that price range than the $100,000 below that and the $250,000 above that. So to me, again, especially when we're looking for deals now, that's right in our median home price range. And so my last batch of flips, which we'll talk about here in another podcast, we were focusing on those properties that were actually less expensive. And then we were definitely still focusing on the median home price. So selling stuff less than 750. But looking at the data, and again, you shouldn't always knee jerk, but I do think this is something that's going to continue for a while, is I am buying, fixing up and reselling homes in that price point that has 2 or 3 times the amount of competitors. And so, yes, we have beautiful product. Yes, we get it done in an efficient amount of time. We work with great contractors, but people still have lots of choices in that price bracket. So I think common sense tells you it might make sense to look at, let's say flipping between 3 and 500. Again, that's tough in our market because there's not a lot for sale. I had a client that found us online and they were asking about doing a partnership flip with us as an investor. And they said, oh, great, I want to buy at 250 and I want to sell at 500. And I was like, yeah, me too. But that means you're doing condos and we wouldn't touch those with a 10-foot pole. So, just stuff to be really sensitive about. I am always sensitive and I'm careful because we did get burned on 2 more expensive properties selling between $1 million and like 1.3. So I'm sensitive to that. Some of our clients has done really well with that lately. But I think in that 750 to roughly $900,000 price range, that's probably going to be a nice sweet spot to be when stuff is fixed up, because people are, yes, they're interest rate sensitive, but they probably have 2 professional jobs. They've got good dual income. Hopefully they've got good savings, probably have a stock and bond portfolio, which in today's environment, again, topic for another time, it's through the roof, market's through the roof, still volatile, but that's going well. So I think that's an area to really kind of focus on, is that 750 to roughly 900. Again, we get a little nervous above $1 million. And again, here was another thing that ChatGPT sent back to me, is profit margins narrow, but opportunities remain. That also set out data that the gross profit from Denver Metro flips, which again is just buy and sell, they don't have a way to obviously carve out, is someone a true cash buyer? Is someone doing private lending? What's their rehab cost? But this honestly was way lower than I thought. So their gross profit in Q2 of 2025 that fell to just under $64,000. And that was a 9% decrease from the same time last year. So definitely, we're kind of getting squeezed in this environment. And so you got to be really tactical of really how you do that. And that to me, again, when you back out those costs, real estate commissions, closing costs, title company costs, that's getting really, really slim. And so that data was from the ATTOM, ATTOM Q2 2025 US home flipping report. So again, I'm kind of like thinking back to my time in grad school, like you got to cite all your sources. So that's kind of a snapshot on the market. Okay, so for what we're doing right now as a company at Elevation is we're trying to be actually one of our agents, shout out to Steph. She's a duly licensed mortgage broker and she's getting into the real estate game. She used the term small but mighty. Like we want to be a small but mighty team. We do not need to be 50 people strong right now. We want to really pour into our people and we want everybody to be hyper productive. So we have 6 full-time investor focused real estate agents. And then we've got 2 part-time folks. Steph is one that I talked about. She and her awesome business partner, Kyle, badass mortgage brokers, and they're getting into real estate investing. And then we've got Carla Thomas, is actually somebody that I should have on as a guest. She is the teacher at the Epic campus. She's a longtime licensed real estate agent, but she's teaching high school students how to get into the real estate business and how to pass their exam. So those folks are more part-time, but we've got 6 full-time people and they're working on, again, like acquisitions of buying properties and working with investor clients and then dispositions of selling flips, either that we're taken down as a company or when our capital is tied up, then we wholesale it out in our transparent wholesaling model to other investors. We've still got transaction management in-house, which is awesome. Rick still spearheads that department, and he also helps oversee, along with Adam, our acquisitions manager, our hedge fund services division. So we do have one active hedge fund right now, and they are doing what I'm calling strategic dispositions. And by that, I mean they acquired a portfolio. They looked at the homes that they have, and there's certain things that just didn't fit what they would have bought had they spent the money up front. So we're helping them strategically sell those houses off. Sometimes we're helping them say, hey, this is a good fix-up recommendation. This is one where you should just list it as is. Sadly, we had one that had a flood, so it's like you gotta fix it or essentially let us wholesale it. So we're still working on that. Travis is still spearheading our project management division, which is awesome. He's our senior project manager and runs our flips and runs our consulting flips for our clients as well. And then again, kind of my main focus, I'm really, really using this time to sharpen the sword, as they say. And I'm really trying to refine our off-market sales method. So we've doubled our marketing spend of doing off-market acquisitions. We really are still putting time into sourcing on the MLS. But the weird thing is I don't know, there's just so much competition. And not to say because it's competitive, we should not do it. But I don't want to put like a disproportionate amount of our time and energy into that. We're still kind of doing that from a maintenance perspective, but I'm spending more money on doing off market and making sure the process is dialed, doing a lot of sales training, again, working in versus on the business. I was just in a living room again with one of our agents. John did a great job. He crushed it the other day. He had 4 appointments in one day. And so I selfishly cherry picked the one really close to my house. But it was great to kind of see not only his evolution as a sales professional, but what are the sellers talking about now? What are they feeling? What are their concerns and pain points? I've talked about this on another episode, but just a really quick kind of tangent is when I worked in the NFL for the Broncos, I always remember the president of the Seattle Seahawks. What he would do is instead of sitting in his luxury suite next to the owner and, being like, oh, this is great, hope we win the game, he would pick 2 games a year and he would be a fan. He would put on, regular Seahawks gear. Sorry, threw up in my mouth a little bit. Don't like the Seahawks. But in all seriousness, he would experience the game as a fan. So he would drive to the stadium. He would sit in traffic. He would eat the cold hot dog. He would sit on the 500 level. Like I really respect that. And that's always stayed with me. So like there's times you got to get back in the business. And then the good thing is we're going to have some really exciting things that we're going to be launching from an educational standpoint here at the end of the summer and the beginning of the fall. So stay tuned for those. It's going to be a way for us to work more with a larger number of people and then still provide the customized support for our clients on the consulting side, because we're still flipping our own properties. We're doing consulting and flipping for other people. And sometimes we're even doing joint ventures where we truly team up and co-invest together. So what do we have going right now? We've got 7 total projects, anywhere from, I guess, technically 6. We just sold one last week. We have 2 on the market right now. We have a third one that's going to hit the market next week. And then we've got 3 that are under construction. We've got 2 of them in the $500,000 price range. We've got 2 of them between $650 and $775. And then for clients, we've got 2 of them between $1.1 and $1.25 million. We have this amazing property coming out probably by right around by the time we drop this episode, and it's in Centennial, and it's going to be amazing. I wish I had the capital to do that one myself. At the time we didn't, so we just got a great deal for one of our clients. So again, everything counts when you're going to list a property. So what I call the pretty things, all your fixtures and finishes, all your design trends, all your accent walls, they have to be spot on, because people are kind of back to the olden days of, 2015 to 2019, where an agent would take out their client on a Saturday and they'd see 5 to 10 properties in one day, depending upon, how tough their client is and how many homes they wanted to see. You have to stick out. A couple things that are the best bang for your buck right now that you can really stand out, but honestly not spend hardly any more money. It's simple, but paint colors. Definitely get with us. We redid again our fixture and finish package. And so that's going to be really important to dial in your colors to be really unique. We've got a lot of cool tile combinations that we've done, not only from our fixture and finish package, but on our couple of $1 million plus properties that we're doing right now. And then just again, simple, but light fixtures. You can get some really amazing light fixtures that look like they're out of, I'm not joking. We saw one that we put in a $750,000 house that it looked like it was in, the Ritz in Beaver Creek, but it was on Amazon and it was under $300. So I think that's something that's really important, is really getting that system dialed, continuing to do that, and picking out great fixtures and finishes. So want to kind of stay on time and on trend with our past episodes. So what's coming next with Elevation? Again, stay diligent. I think the next 6 months are going to be key to honestly surviving. One of the things that I fall back on is my background in sports. And so we kind of have a mentality right now for honestly we're looking at it for potentially 18 months, but I really do think the next 6 months is going to be challenging, but it's defense wins championships. So taking these monster bets, taking these huge risks, I don't think is a good idea right now, but we're not going to put our head in the sand and do nothing either. We've got a business to run. We've got people counting on us. I've got, high school kids that I'm trying to teach how to go through adversity when things aren't perfect. So that's super important. So it's thrive and survive for another 6 to 18 months, depending upon where you're at in your analysis of the market. We'll do another episode here coming up on deal analysis. That's going to be really key. We've had some good wins, but we did have a loss too. So again, you guys know me. I will always talk about the good and the bad. And then we've got an Elevation Academy coming up. So October 3rd is going to be our next Elevation Academy. I think the summer's crazy. We try to do them in the summers, but obviously everybody has hectic schedules. So we're going to be partnering up again with Spire Financial, hosting that at their super cool downtown office location. So we can only fit about 30 people in that space. So space is limited. We're already starting to fill that up. So get with us if you guys want to attend the Academy. And again, everything is timely. It's exactly what's going on right now. So as we wrap up this episode, definitely connect with us. Engage, follow us, subscribe on all of our different social media platforms. On YouTube, I've also got a newsletter, so connect with me on LinkedIn. It's the Fix and Flip Insiders newsletter. So again, we're pumping out great content. So it's just fun to get back in the saddle, as they say, get back to doing the podcast. It was fun working on the business, but we're going to really dive back into the content and build our community. So I hope you guys are doing great. Hope you guys are having a great summer. Thanks for tuning in, and we will catch you guys on the flip side.
Elevation. Flip that house, man, is money for the making. We gon' get it, hustle harder every day, fam. Sky's the limit, time to make this life amazing.